Hello, I'm Dr Alistair Milne. I'm Reader in Banking and Finance here at Cass Business School. Now, it's my pleasure today to introduce my colleague and long-time collaborator, Professor Geoffrey Wood, who is Professor of Economics here at the school. We both teach together on the undergraduate degree, the BSc in Banking and International Finance, and have many areas of common interest. Geoffrey, I thought I'd begin by asking you about a topic on which you've written very widely. It's lender of last resort. So I wonder if you could explain what lender of last resort is.
It's actually a very old concept, Alistair. It evolves in a system where you have banks which take in deposits from individuals and then lend out most of these deposits. This works very well so long as all the depositors at the bank don't ask for the money back at the same time. And that's the common situation. But now and again they do all ask for the money back. And in these circumstances the bank can't pay them. Now that is tremendously troublesome. If one bank fails, other people fear their bank is going to fail. So they go and get their cash out and so forth, and you could end up collapsing the banking system. And the role of the lender of last resort is, in such circumstances, to lend on security to the banking system, supplying cash. The central bank supplies cash in this role, so that banks which have maintained good securities which they can sell to the central bank, sell or discount to the central bank. These banks can get cash and they are protected. And in a way also it's a way of eliminating bad banks, because if bad banks have not maintained good collateral, that under these circumstances they go under.
Okay, so just to explain it, so who is it who does the lending?
The banks, if they're short of cash, will go to the central bank. The central bank would, since it's the ultimate source of cash in a modern economy, or it has been in the economy since the beginning of the 19th century, would supply cash in exchange for securities which these banks had on their balance sheets.
Okay, so it's the Bank of England
in the British context, the Bank of England. In the French context, it would have been the Banque de France. In the United States, the Federal Reserve, and so forth.
Okay. I'm trying to think, because there are, all too often there are occasions when banks get into difficulties, and I was thinking about one example a few years ago was the French bank, Credit Lyonnais, which you remember was state-owned and did a great deal of bad business and sort of came a cropper. Now the French government, rather than the
that had to be the French government, because the problem was not that this bank was temporarily short of cash, but simply it had made lots and lots of bad loans and had lost money and was going to be insolvent. So they had to get deposits, they had to get capital from the big shareholder, who was the government.
Okay, so the French government stepping in to support Credit Lyonnais, that's not lender of last resort?
That is absolutely not lender of last resort. We should probably think of that as what's called a bailout, a supply of funds to a bank which has been so badly run, or so astonishingly unlucky, in this case badly run, that it would close down without the funds.
Now we thought something we've written on together recently is the case of the UK bank Northern Rock, and I guess the immediate follow-up question from that is we had the Bank of England giving it some support. Do you think that was lender of last resort, or was that a bailout?
That's actually a very difficult question. It was neither one nor t'other. It wasn't a proper lender of last resort operation, in the sense that the entire banking system was not short of cash. Nonetheless, Northern Rock was not at that point short of capital. It was short of cash because the money markets from which it usually borrowed had closed down, and it needed the cash rather urgently. So it was the provision of liquidity to an individual institution, which isn't lender of last resort, but nor was it a bailout, because the Bank of England wasn't supplying capital.
Okay, and I mean at the time, depositors became very frightened, and we saw it on television screens, long queues, and eventually stemmed by an announcement of a guarantee on deposits. Do you think depositors were right to be frightened and something for them to worry about?
I think they were wrong to be frightened, but right to get their money out. The reason I say that, they were wrong to be frightened because it was quite plain, and it had been announced, that the Bank of England was going to supply cash. So they knew their cash was safe. But there was always the risk that Northern Rock might have to close down, in which case they'd have only got the deposits out with a considerable time lag. And as you know, getting your money when you want it is important. Being told you can get it in 9 months' time can be very inconvenient. So the queues were perfectly rational.
Okay, but I understand we're changing the law to make it easier in such a situation.
Well, we're currently changing the law so that it should be easier. The law says it will be easier. The law has not yet successfully specified a mechanism whereby this will be done. And it's an outstanding characteristic of the present British government to say this will be done, and to then assume that because they've said that this will be done, it will be done.
Okay, I thought we might move on to a quite different topic. Now, of course, Caswis, located in the City of London, we have a great deal of access and contact with the city and with practitioners in the city. And I think that's also been another interest of yours over the year. So I thought I'd ask you the very general question, because it's something you've worked on and written about. What is it that has made the City of London such a successful international financial centre, the biggest in the world?
Well, the city got its starting point a long time ago. And this starting point came because of the existence of the English Channel. Amsterdam and Paris were both financial centres before London. But of course, they were liable to invasion, susceptible to invasion by land armies in the 18th and 19th centuries. So when they were threatened, the business moved to London. Because Britain could be invaded, but it was much harder. You couldn't simply drive your troops across the border. You'd have had to sail your boats across the English Channel. So London was a safer place because you knew the business would continue. And London has then built on this advantage by the combination of light regulation and the tremendous virtues of the English common law system. And the common law system is very, very important for two reasons. There is no case that cannot be settled under common law if you are sufficiently ingenious at finding a precedent. Because precedents always exist. If you can infer that precedent 300 years ago covers today's case, then it determines the outcome of today's judgment. That's very important. Secondly, the English common law system is quick. You may not think it if you look at it, but it's certainly quick by comparison with most other jurisdictions. So we have that tremendous legal advantage. That, for example, is why the futures markets developed in London, because the futures markets were governed by contracts developed to cover, I think if I remember correctly, cloth futures in the 16th century. So that's one reason. The other reason is the kind of very light touch regulation we have had. Regulation which is based on principles rather than on detailed rules of conduct. That has two advantages. First of all, again, it's cheaper for the firms to run if they simply obey these principles. And secondly, if you know your firm is obeying principles rather than formal rules of conduct, you know that they cannot cheat you or mislead you by finding a way around the rules, because whatever they do, they have to comply with the principles.
Okay, is that the same true of the United States, New York in particular, because that's also an important financial centre?
It's all true, but to a lesser extent. London has the additional advantage of a time zone, both have advantage of the English language. New York regulatory system is much more bureaucratic. The legal system is somewhat more uncertain and perhaps a little harsher in its penalties. The American legal system occasionally, to my eye, tends to view stupidity as a crime. And my impression is that if stupidity were a crime, we would have very few students walking the streets.
Okay, so you think London has a great future ahead of it? I'm thinking of we're going through a very difficult financial crisis.
London certainly has a great future ahead of it, provided the regulators don't, as in traditional regulatory fashion, overreact to the present problem.